We're going to talk about broadening formations and continuity. First thing I want to do, show you the different types of tries. So there's an internal, a subtry, and a major try. The internal try is going to occur once price has reversed from the top or bottom of the larger or major broadening formation and then fails to make the new highs or new lows. It will start as an internal try or a sub-try, you can also call it. The internal try will be completely stuck inside the previous range. And when price is inside on a higher time frame is when we expect the broadening formation to form, because it will always start new price discovery once you go inside year or inside month or inside week or inside day or inside 60. Thus, if we're an inside day, likely to get an intraday try in like the 5, 15, 30s, 60s. For inside week, likely to get a nice try in the 60. If we are inside month, we're likely to get a daily try and so on. So in this case, we're looking at a monthly chart during a mother bar or an inside year. We're going to see all this price action is completely stuck inside of 1 month here. So what happens? You can see they start the try up in here, poke up, poke down. They try to poke up again, and they're too weak to make the new highs, so there's this new internal try starting. And you'll notice it's internal because we did not make the new highs to this or the new lows to that, so they start really small. When they make the lower high and the higher low in here, chop shop, poke down, poke up, poke down, poke up, poke down. Then over time, that's going to increase in size because it will broaden. The second type of try is the sub-try. It will be a smaller broadening formation to the major try, or we could also say a smaller broadening formation to the bigger one. We will also often see these occur at highs or lows of a larger time frame broadening formation, and this allows you to domino your entries using the sub-try to gain low-risk entries, short or long, and then if these entries work, you can add to larger time frames signals to go back through the major try. And this is something one of our traders, Jam Trades, who now works at Microsoft, way up there, loved. This is all he would look for. He would look for the broadening formation to occur on the smaller time frame at the top of a bigger time frame or the bottom of a bigger time frame broadening formation. So we call this a sub-try because it's smaller than the major one. And these will occur on every time frame. So you'll drive yourself nuts if you draw every single one out, but the ones that you see that are nice and obvious, those are the ones that work the best. And then the major try is just simply the biggest broadening series you can find on the asset you are trading. So given our analysis starts at minimum the monthly chart, ideally the year or quarter, the major try is likely to come from one of those 3 time frames. The sub-try would be any broadening formation that's not stuck inside, but occurring at the lows or highs of that major broadening formation. And we can say sub-try or internal try pretty much interchangeably, but internal try is not a sub-try every time. A sub-try is not an internal try every time. So they are 2 separate things. It's kind of like the square and rectangle where a square can be a rectangle, but a rectangle cannot be a square, right? So now that we have a little understanding there, we can say Qs. So we go on the weekly Qs. I'm going to remove the continuity indicator for now. Weekly Qs, whenever continuity changes or a reversal occurs or a signal sets up is when we draw the try. We can also draw it off of 3s. But you'll see Qs, the 2-2 week in here. So we start drawing right to left, and in this case, it looks something like this, just on a weekly chart. And then it causes that to expand. It gets bigger. So we just continue to draw right to left. So once this week is closed, right to left to here. Then once this week goes into expansion, closing out, we can either leave it or we can continue to draw right to left. It's up to the trader. Then you can see the gap down. And once that continuity on the week changes, we can draw it from the lows of that week. As long as that continuity does not change, it's green, it's changing where price is going. So we have this try here. The sub-try, it's going to be occurring down at the bottom of this to give you entries back through this bigger try every time. Also occurs at the top here. So if you go to a 60-minute, what you will notice is they start the week by going higher. And price will eventually have to stop people out, which is what the broadening formation is. So you'll see they make the recent highs. You have a 3. So it actually starts here. 3 is your broadening formation. 3, poke down, gets bigger, right to left. Poke up, gets bigger, right to left. Inside bar signal from the top of the range tells you it's more likely to take this out than it does. You draw right to left, right to left. So once this 60 has closed at end of day's trading, this is what we draw out, the broadening formation. It opens as a kicking pattern 60 above this, 44101. The magnitude of that is to go into the top of this range. And if that signal works and we can have our stop at even, we are now triangle day out or sub-try entry back through the bigger broadening formation. And what will occur is this. Once this try happens, you'll make that new recent highs. So you take the other side out. And if they're not closing outside of this high, they just poke up and they wick, we draw right to left. We continue to do that right to left until they close out. Once they have closed out of the broadening formation, it should become support. Once that occurs, the next target that it should go to should be the range of which you are stuck inside. So your internal try is stuck to what? What is this range stuck inside of? It's stuck inside of this high and this low. So if we start expanding this here, where is it trying to go? This high. If we were to start expanding the lows here, where would it try to go? This low. So it makes it really simple to gauge magnitude. And then if that works and we go make that high, who's to say it can't keep going, right? So we say if it's going all the way up there, we want to gain entries here. We want to add to it here, risking their money. We want to buy more up in here if we can. There's some 30 signals in there. Then you get some more sub try in here, really small broadening formation. And they expand that, and then they go and take the highs out. And you can see there's some more entries that occur up in there. Now, once it has made those highs, we don't know. We've taken all this stuff out. We just got to see if it continues. And that's where the weekly and the bigger time frames come in to manage and say, well, is that weekly still good? Has this weekly uptrend started to get reversed? So when it closes out like this, you're nowhere near reversing that. So we're not expecting it to reverse yet. And then it goes up, and it starts coming back in a little bit, and then 2-2 reversal. Now it's reversed. That is when we have to start taking profit. Then you can see they go 2 down again, which confirms that, and they go and take the magnitude. And this week, they negated that, going green, and changed the direction. So what you'll notice in here is we had failed to make the new high. When this just starts making the wick and then 2-2 reversal, fails to make the new highs. Notice we also failed to make the new lows. So what's happening? So the sub or internal try is now forming. Here's your internal broadening formation. Now, when we talk about continuity, continuity is what tells you when you're going back through the broadening formation you've drawn. So if we draw out that weekly broadening formation from weekly magnitude, so make the slight lower low, slight higher high drawn right to left to include all previous range, you'll notice back in here, what tells you it's trying to go back through? The continuity of that day, 60, week, and then intraday timeframes. So if we go to this week's action, you'll notice we open inside week. We also open mother bar day. So what happens? We start the new internal or sub try. So they make a 3, right to left. This is on CPI. They go 2 down, right to left. Notice the change in 60 continuity from red to green. We redraw right to left right when that occurs. Then that 3-2-2 signal target is the other side of that. We ask ourselves, if this signal works, does it change any continuity groups? Well, you'll notice the week was green when that signal formed. The 60 was green and all intraday timeframes were green as well. So anyone short today, they are no longer showing as evidence. We have no sellers in our evidence here when that 60 breaks 2-2. Because the 60 is going up, tells you right now it's going up. The day was red, but since the 60 is up, we have no evidence of today's sellers when that 60 is green. And the week is green. So we have evidence of the 60 week and intraday participants buying. No evidence of the daily seller or the monthly seller that was prior in the prior week. Once it goes up in here and closes out, it is now expansion, which means they're doing what? They're looking to take out whatever range we were stuck inside of, which we had the mother bar on the day up in here we're stuck inside of. So they take that out, and then it does not reverse. So they're continuing to try and take out more of these guys. So they chop, 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 boom, expansion. And now this is where the easy trades are. And you'll see if we go to the previous week on Tuesday we didn't open on Monday. You can see the kicking pattern 60, 2-2 reversal, creates this sub try. Then they go into expansion here with every time frame hitting the bid. They puke. Then it acts, you can see it has resistance in here. They did try and recover it and then right back down through the sub try that's in here, internal broadening formation to all this. And they get stuck in that and then they finally expand that out. And you'll notice this week we're reclaiming all of those ranges. So the last thing I can say is this. When you're drawing the broadening formations and you've closed out of them, you can leave them drawn. So if we're looking at the major tries, or you'd say the sub tries to big time frames, so the bigger 60 tries in here. Here's your bigger 60 try. You'd say go all the way down in here, close out. So we're redrawing it to this stuff. Once it's closed out of this, we leave it drawn. When they start reclaiming that range, now this 60 try, this is your bigger try, right? And then the sub try is what we identified down in here. And then the continuity tells you which participation groups are taking the offer or hitting the bid back through this range. In this case, it was anyone that was trading today, right now, and this week, after CPI had resolved higher above 460.14. They have continued to take the offer and do it this week, and today, and right now, with slight profit taking in this stuff.